Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. Just do a little disclaimer nothing on this show should be construed as investment advice, just my opinions, my thoughts on the market. And let's just get into it. Big news on the inflation front. If you look at it, let me go to the economic data I haven't shared yet. So let's go. Big news, core inflation rate, 2%, less than expected. This is the market. Obviously, if you look at it right here, Dow Jones up 700 points, S&P up 100. S&P still not over 6,000 yet, though. But the market reacted very kindly to these words, thinking that inflation's getting under control, soft landing hope, and the economy. And as I said, we're going to have inflation problems later. I think this just means the Fed's going to cut rates. If you look at this, this went unnoticed. New York Empire State Manufacturing down 12 points. So manufacturing is really getting killed. If you look at this, this just goes to show more problems are down the road because MBA mortgage rate. Look at that. Mortgage rates are now above 7%. This is not good for housing. And I wanted to do one thing too. See what interest on the 10-year are. So let's see. Interest rates on the 10-year, those actually went down because of the soft inflation, as you can see, down. But MBA, the mortgage rates are increasing. So you're going to see we're going to have higher for longer. I know this is only up for today, but I think this is a one-off. And I think what's going to happen is if we keep getting rates like that, they're going to lower rates, then inflation's going to creep back up. And what shows just a leading thing that I was talking about is I'm going to go to this article here. Everyday prices keep climbing, even steadier overall inflation. And if you look at it, the really things that are coming down are like what you need. I mean, what you want, not what you need. Like groceries increased according to this 3%, and one of the biggest ones was eggs. That was a big one. Beef and veal prices. Not a fan of veal. Non-carb juice. Those went up a lot higher. So then look at the senior care and healthcare cost, and population's aging even more. So if you look at it, health insurance, that's up a lot again. Even prescription drugs were higher. And I think one of the reasons the index fell flat is if you looked at my videos, even listened to, I talked about this, a lot of prescriptions are now going unfilled. So there's a demand component to it. And it's not because healthcare demand in general, people don't need the prescriptions, they just can't afford to fill. So, and if you look at this 12-month change, auto insurance. But yeah, if you look at this senior care, what else? The cost of driving. But it's basically other vehicles. It's not like the price of cars. Auto insurance is starving, as you can see. Part of it is migration, as you know, the Springfield, Ohio story. Car maintenance, repair costs. So, and yeah, this is why I said drill baby drill is not really going to work. Gas prices are already at their low. If it goes any lower, a lot of companies they won't be able to invest more. So, but yeah, if you look at this overall inflation, but the big ones, restaurant meals, housing, rent, airfare, which I know I flew overseas, auto insurance. You can't just like cut these out of your business. If you look at it, senior healthcare, you can't just cut healthcare out of your business. Juice, beef, eggs, like good food, you can't just cut those out of your budget. So where are they gonna cut? It's gonna be obvious. It's discretionary. That's what they're gonna cut. They're gonna cut discretionary. Now, gold had a big day, and that's because of the interest rates. The interest rates went down. I think gold will more explode when inflation goes up, but right now, gold will go up. See, you don't really have these are after hours. Uh, I think gold will go up some with the soft landing, but I don't think the miners will really take off until the inflation goes up. People look for gold leverage. And the last thing is, before I wrap it up, is this is more of a sign of a market top than a bottom. Wall Street's preeminent short seller is calling its quits. And he says job stress. Well, yeah, when the central banks are inflating all asset prices, can't really sell anything short. So, and you can't really be an value investor, which is a Buffett thing, if they're just going to be inflating all asset prices. So, anyway, you see, that's more of a sign of a market top. That the is when the bears start throwing in the towel. I'm not saying this is the top, but it's close, in my opinion. And gold, I've been consistent. One more run, a parabolic run. When you see crap juniors like stuff that's like impact silver or stuff that's like 30 cents, when they're trading at $3 to $4 to $5, that's when you know the market's gonna top and it will be entering a multi-year bear market. But we're nowhere near there yet. A lot of the crap juniors. I'm gonna go take a look real quick. Real quick. Let's see. Let's do impact silver. I don't have to disclose. I don't own it, so I don't have to disclose anything. See how much that is. Yeah, 15 cents. So let me share my screen. I don't know exactly which one it is, but if you look at it as I'm doing this, 15 cents impact silver over the counter. So is there anything, what's another one? Uh, mm, so anyway, just want to do investment, this, disclosure is not investment advice, just my opinion. And if you watch all the way through, thank you. It helps the algorithms. And I had a busy day, so I just want to do this short. I will see you next video.